Hi, I'm Hadley Heath Manning, Director of Policy for Independent Women's Forum. And today it's my pleasure to welcome to Facebook Live Mattie Duppler, who is President of Forward Strategy. She's also a Senior Fellow with the National Taxpayers Union. And most importantly for us, she's a visiting fellow with the Independent Women's Forum. So thanks, Mattie, for joining me today on Tax Day, an exciting day.
Thanks for having me. Yeah, it's great to be here.
I guess usually most Americans are just happy to see Tax Day because it means, most of us have filed all the paperwork. Our returns are headed to Uncle Sam or to our state governments or whatever. So it's kind of out of our hands and we've handled, our business for the prior year. But I specifically wanted to talk to Mattie today about tax reforms that really don't take effect in 2017. They don't affect those returns that we're filing today for those of us who are last minute. So Mattie, can you explain to us the tax reform law that passed in late 2017? Is that having any effect on everyday Americans' lives already? And if so, what is that? And how do we square that with the fact that it doesn't really affect the tax returns that are due today?
Right. So you hit on the two kind of major important themes, I think, that are really important to remind people for today. And as we move into, the filing deadline for this year, as you mentioned, you have until midnight tonight. So if you're still not done with your taxes, you still have a little bit of time. You also have until midnight tonight to file for an extension if you have not quite got all the paperwork together that you need to get done. And, this is common cause for folks who've been filing their taxes for a while. All of the paperwork, all of the documents that you have to gather together, it takes a lot of time. It's a pain. And so one of the benefits of tax reform is simplification, which is something that you'll see really come out in droves next year when you start filing your taxes. The process of itemizing on our tax forms, trying to figure out what deduction you can and can't take, all of that is a big headache. And really only 7 in 10 taxpayers prior to tax reform were taking the standard deduction. So 3 in 10 taxpayers were doing that itemizing and really kind of getting down into the nitty gritty of filing their taxes with all those different tax credits and deductions. With tax reform passage, because of the simplification in there, the lowering of the income rates, as well as the increase of the standard deduction, over 9 in 10 taxpayers will be taking the standard deduction. So a lot of people who are thinking about their taxes, if they've already done them this year, and all of the paperwork they had to go through to get them done, you might be one of those people who's thinking right now, wow, that was really a pain to go through all of my paperwork and get to my accountant all of the different deductions and credits that I thought I had to take. You might be someone who just can take the standard deduction because that's doubled and that will give you more money back in your own pocket next year and really wipe out a lot of that time and effort spent filing your taxes. So to your point, Hadley, yes, the tax reform took effect beginning of this year, but you are filing your taxes today for last year. That doesn't mean, though, that benefits haven't already been realized for taxpayers. You, of course, have seen all of the announcements across the country about bonuses and wage increases, expansion of benefits, drops in utility rates, a lot of benefits coming out of tax reform from corporations that are realizing they should give some of these benefits in the form of lower taxes back to their workers through expanded benefits or bonuses. So over 500 different companies in this country right now have executed bonuses or increased wages for their workers as a result of tax reform. And that all happened really within the first month. Within January of 2018, the tax bill was still being implemented. That was a new and I think interesting and frankly, as someone who's an observer of tax policy, somewhat surprising consequence of the tax bill. I did not expect to see that kind of corporate enthusiasm right out the gate in January. And I thought that that was a great example of what happens when you have a competitive business environment where corporations actually have some money that they can give back to their workers and reward their workers for their work. Now, secondly, moving into January and February, the IRS, of course, had to start executing the tax law. So for those of you who maybe have just started a job, you remember that you filled out your W-4 form when you first started your job. That's showing how much withholding you want the government to withhold when you get your paycheck. Every month or every 2 weeks, whatever your case may be. Those rules then had to change to codify the new tax law. So once that changed in January, February, that's when people actually started to see higher take-home pay. And so that obviously is a benefit of tax reform that even before you file your taxes for next year, Americans across this country are already seeing. You look at your paycheck this week compared to what you saw in the first week in January, it's most likely going to be different. It's going to be a little bit more take-home pay in your pocket because of tax reform. So that's another immediate effect. So moving into the rest of this year, we're now past the first quarter of the year. There are going to be a number of other changes that I think are important for folks to pay attention to, but they're a little bit more broader in scope. What we're going to see is we're going to see a lot of businesses start changing their behavior because of the way tax reform restructured business climate here in the United States. You know, we went from a 35% corporate tax rate, which is the highest in the developed world, all the way down to 21%. We stopped the process of taxing corporate income when it's abroad and when it comes back. So instead of that double taxation, companies can now bring that money back to the United States and reinvest that in their workers and their businesses here. We also have full business expensing, something that allows businesses to write off the cost of a capital investment the year that it is made. All three of those things taken together in one fell swoop are really going to change business behavior here in the United States. And that in turn is not only going to create more business activity, going to create higher bottom lines for businesses, and that's both family and corporations, but workers will see that as well. We saw that from the White House Council of Economic Advisors. They put out a study saying that worker wages will rise to the tune of $4,000 over the next year because of these benefits in the tax law. Really, and that was attributed really only to the corporate tax rate reduction, which is a huge boon to making the United States competitive again. But taken together with all those other measures, we're really going to see a lot of business activity that has been excluded from the American border for so long because of the uncompetitive nature of our tax code. That money coming back to the United States and being invested here, workers will continue to see their standard of living rise as a result. So there's a lot to look forward to in the coming year, not to mention how filing your taxes next year will be easier. Not that anyone probably looks forward still to filing their taxes. That's completely understandable. But I think that over the coming months, we'll continue to see the cascading effects of tax reform as it applies to economic policy.
Yeah, I can't wait to file my taxes next year. That was an excellent summary, Mattie, and I want to welcome some people who have tuned in. This is a Facebook Live interview with Independent Women's Forum visiting fellow Mattie Duppler, and as you just heard, she was explaining some of the provisions of the Tax Cuts and Jobs Act, which is the tax reform law that passed in late 2017. Mattie has also written specifically about the impact that this law might have on women in our economy, women and families. And of course, at the Independent Women's Forum, we believe all issues are women's issues, including tax policy. So Mattie, my next question for you is, what specifically do you mean when you say that the tax law could have potential benefits that would be especially attractive to women?
Yeah, I think that IWF's position on this is so important. The notion that all issues are women's issues. I look at this from an economic perspective saying tax reform is for women because women care about taxes no matter who you are, right? It's if you're a mother, if you're a daughter, if you're someone who's a caretaker, if you own a business, if you're an employee. The average American woman is all of these things. She's not just one thing. So for too long, our tax code and a lot of our economic policies have looked at one area of the population, in this case women, and said, you have to be one thing. And our tax policy is only going to accommodate the one identity factor that you encompass. So if you're a daughter, we're only going to treat you as a daughter. You can't also be an employer and an employee. Well, that's just not the nature of the modern American woman. It's not the nature of the modern American workforce. You know, you look especially at younger voters. These are people who are now both working for traditional businesses, but also starting their own businesses, the so-called side hustle. So now we have a population of people who are going to be the largest voting population in not too long, for just something to keep in mind. But we have this population of people who are both a worker and an employer. So what do we say about a tax code then that only treats them as one specific entity? It simply doesn't work. So that's why tax reform was so important as it passed in December, because it starts to accommodate some of these changes and the complexities that the modern American woman is. So I wrote a piece in The Hill that talks a little bit about this. A couple of the things that I pointed out is, one, that women make the majority of household financial decisions. So that point that I made earlier about tax filing being a lot easier in the coming year, the fact that Americans won't have to wade through mountains and mountains of paperwork just to figure out whether or not they get $1 deduction here or $1 credit there. Just taking the standard deduction will free up mass amounts of time, which is important. I think the average American spends about 15 hours filing their own taxes, but money as well. The average American also spends about $270 filing their own taxes. That's a good chunk of change. That's something that obviously any American can identify better uses for $270 than devoting it to filing your taxes. So just the economic consequences of getting rid of that dead weight loss on the tax filing compliance costs is is so important. And National Taxpayers Union, where I'm also a fellow, we just produced a report yesterday that was released that talks about a little bit the full breadth of that problem of the economic costs of filing for the tax code, and how that will hopefully get better in the coming year as the tax code continues to evolve with tax reform going into effect. Now, secondly, I think you look at the full scope of things that a woman has to contemplate in her daily life. You know, as a consumer, you obviously have to discuss excise taxes, and that's something that I think we could do years and years of Facebook Lives about how unfairly as a consumer sometimes you are treated as a woman. But more importantly, on the income side of things, you know, if you are someone who owns a business and you're trying to invest back in your business, if you're organized as a corporation, obviously that rate reduction is really important for you. But if you're a so-called pass-through business, which means that you pay your income on the individual side of the code, the reduction in the individual tax rates is just as important for you. On top of that, there's now a new 20% reduction for the income you're earning as a business owner, and the other components that make the tax code more competitive to help business owners. As we mentioned before, full business expensing, so crucially important for a business owner, someone who is trying to invest back into their business. They should be penalized for doing that. They should be induced to continue to invest their profits back into their business and back into their workers. And of course, there's a cascading effect to that. The fact that you have women who are running businesses means that you have women who are employing other women. So as a worker, if you're an employer who now has workers to pay attention to, you want to make sure that you're taking care of them. More money in your pocket as a business owner means you can invest back in those people. And those people, of course, in turn become consumers who hopefully are able to make more informed decisions because they're able to keep more of their own money. So, you know, this is an idea that I think needs to continue to be discussed widely. The fact that if our public policy treats anyone, but treats women in particular as a one-dimensional figure, then our public policy is failing the average American woman. Because the average American woman is complex, she's multidimensional. We should have public policy that evolves along with her. And that means someone who starts out as a student, who maybe starts out in that very low income bracket with their first job, but aspires to be a business owner, who maybe someday also will have 4 children and will be taking care of her dependent parents. How does our tax code approach that person and offer them the best amount of opportunity possible? And I think what we did in December by really flattening out the tax rates, increasing standard deduction, getting rid of some of these complexities, and really embracing business both at the corporate and on the individual side takes a giant step forward in that regard.
That's really well said. And I like to say, we all like to say at IWF that there's no such thing as that cookie cutter woman. So it's hard to, you know, to reduce women to one particular interest when it comes to a tax code. A tax code that's more beneficial to our entire economy is certainly going to include benefits for women. And I want to plug some of our own work here at Independent Women's Forum website, IWF.org. We have a policy focus where we go over some of these changes in a written format. If you like to read, you know, a policy brief about it, you can find that on our website. And I mentioned some specific things. I look at things through the lens of a mom because I'm expecting my second child and I've got a family. So the child tax credit is going to be really beneficial to my family. That's doubled in the Tax Cuts and Jobs Act. And then the changes to education savings accounts. I mean, there's a lot of things that we could go on and on about the little details of this tax law, but there's a lot in there for families and for working families. So I encourage folks to visit our website and check that out. And I want to remind people, if you're watching on Facebook Live and you have a question for Mattie, you can enter that in the comments section. I can see in live time some of your questions, so I welcome those. But I have a more challenging question for Mattie, and I hope you'll entertain it. But obviously, like any new law, this new law has some critics out there. Some people say that this law is only going to benefit some Americans, not all of us. They say it's only going to benefit corporations, not the little guy, or they say that it'll add to, you know, our national deficits and debts. So that's, you know, that sounds concerning. What would you say to some of those criticisms?
Okay, so let me take those criticisms in reverse order, because I think they all, you know, they all come, like most criticisms, they come with a kernel of truth, but then they're extrapolated outward to which, to an extent that I don't think is really defensible. First, when we talk about tax reform, in particular, how it affects the deficit, I think that this is an important point. I am someone who works just as closely on spending policy as I do on tax policy, and I truly believe that the government needs to continue to control its finances, and it does a pretty poor job of doing so. However, I think it is a mistake to conflate spending and tax relief as the same thing. And the focus on the deficit allows us to do that. It really is a fig leaf for people who are claiming fiscal credence to say the deficit is the important metric, when really the deficit is a measure between two important metrics, spending and taxation. So when you lower taxes, yes, that might increase the deficit, but only because then the government is not doing the concurrent action, which is reducing spending to keep it in line with the revenues that it has coming in the door. Now, from a political perspective, I will say that when we first started this exercise of tax reform, you can say years ago, but even really in earnest this last year, I was surprised that there was consensus to move away from a deficit neutral position. I thought certainly that was going to be one of the kind of guardrails that was going to guide the conversation on tax reform. And that's because it was so important in 1986. The last time we were able to get tax reform done at this magnitude, that was the number one starting point, which was that it had to be deficit neutral, because then you didn't have Democrats trying to claim more revenue to spend it elsewhere. And you also had Republicans getting Democrats to the table to mollify their argument that this was just going to be a big cut in government resources. Ultimately, the tax bill increased the deficit by $1.5 trillion, but I would argue the economic feedback on $1.5 trillion of tax relief is quite a bit different than $1.5 trillion in new spending. And you see that actually in the Congressional Budget Office agrees with that. They released their new economic forecast last week, and it says very clearly the tax cut will have a different economic impact than this new spending. The new spending that's been signed into law recently will create a drag on the economy that the tax cut will not. So competitive policy that allows for smaller government and allows free enterprise to thrive is really the answer if you're worried about the $1.5 trillion price tag on tax reform, because it certainly has a different economic feedback. And I certainly think allowing Americans, businesses, and families to keep their own money is a lot more beneficial than having the government spend it through an antiquated program that has very little accountability. Now, secondly, you talked a little bit about the fact that people look at this and say that this isn't going to benefit the middle class. It's only going to benefit rich people. I think. Right. It's unfair. This is a patently false reading of the actual tax reform bill. If you look at the actual distributional tables on tax reform, it's actually made the tax code more progressive. So if you're someone who believes that our tax code should be involved in making a fairer economic circumstance by taxing people who make more money more, this tax bill does that. You should be happy with the tax reform bill. Now, something that critics will point out is that the individual side, many components of the individual side of tax reform do expire in 2025 as a result of Senate budget procedures. That was kind of a timing gimmick that had to be worked into the tax bill to get it to fit into Senate rules. And I certainly think that's worrisome. I think that it's really important moving forward that Congress take action to extend the individual tax relief and make it permanent. There is an argument to be made that because there is this somewhat artificial cliff in 2025, that the middle class could potentially see a tax increase. Now, do I believe politically that we're going to have Democrats who are willing to send us over that cliff? I certainly don't. Even President Obama signed into law almost all of the Bush tax cuts because he didn't want to see that tax relief expire. But it will be, I think, a long road until we see permanent relief extended. And I certainly hope that the House of Representatives takes a vote this year to extend that tax relief and make it permanent, in order to start to put pressure on Democrats to come to the table to do the same. And you had one other criticism that I think I've forgotten now about what the tax bill will do. I think those are made.
I think people compare the changes on the corporate side and the changes on the individual side, and they say, well, this is really just a gift to corporations, because the corporate tax cut came down like 14 percentage points, which is huge. Right. But, that argument would fail to take into account the way that individual workers and shareholders are affected by changes to the corporate income tax code. So maybe you can explain how a corporate tax cut isn't just for the fat cats smoking their cigars in the back room.
Well, it's twofold. Yeah, it's twofold. So one is the fact that the tax bill had very robust both corporate relief and individual relief. So if you look at, I believe it's $120 billion on individual tax relief through reduction of the rates and increase of the standard deduction, which is more than what you're going to see on just the corporate income tax rate reduction law. Actually, let me take that back. I don't think it's more nominally, but it's also a huge chunk of the revenue reduction in this bill comes from the individual side. So the reduction in the individual tax rates in conjunction with the corporate income tax rate creates a lot of economic behavior that you wouldn't have seen otherwise, as we mentioned before. Now, also to your point, we live in a complex economy. This ecosystem does not exist in a vacuum. So when a corporate tax rate occurs, it is not simply going to the CEO of that company who's pocketing that cash. In fact, corporations pay many layers of taxation, and as a result, some of that is obfuscated by just the corporate income tax rate. That's why some of the other provisions in the bill, the doing away with the worldwide taxation of business profits, making sure that American businesses can bring their profits back to the United States and invest them here, and then inducing them to do so by expanding full business expensing and making it easier for them to make a capital expense, is so important. And I mentioned a Council of Economic Advisors report earlier in this Facebook Live, but it bears repeating here because it goes into the discussion of what has really kept wages stagnant. And when you talk to Americans across this country, you talk to Americans who voted for President Trump in particular, the theme that keeps coming up is this notion of being left behind. The idea that Wall Street is getting ahead, that big business is surviving, but that the average American worker has not been a part of the recovery is pervasive. This is something that is shared across the United States. And they're right. If you look at wages, those have stayed stagnant for the better part of the last decade. And that's because even though you have business activity, even though you have corporate profits starting to rise, businesses can't take that money and do anything with it because of the way the corporate tax code was structured. That arbitrarily high rate, the lack of incentives to invest it, the inability to bring it home from abroad, all three of those things kept that money from actually going to workers. So now that businesses are able to use that and invest that back into their workers will see that increase in wages because these businesses will be able to be more productive. If you're a worker who's been using tech from 2007 to do a job in 2018, it's obvious that there are some updates that could be made that would make you a more productive worker, that would make your labor more valuable, and that would increase your value in the market and increase your wages. And so that's a little bit of like a green eye shades argument, but it makes sense when you think about it. The notion that we have businesses who have money they can't spend in the United States, of course workers have been left behind when that's the phenomena we're experiencing. I do not believe that we'll continue to see that now with the changes in the tax code, especially coming into the second quarter of 2018, where we're going to start to see some of that behavior change. I think this will be something like a second round of kind of the bonus mania we saw in the first month of 2018. You'll see businesses really advertising and broadcasting the fact that they're bringing their money home and they're investing it here in the United States, not only because it's good policy, but also it's good for them as a brand. It's good for them to show that they believe in the American workforce and the products that they produce here. And I wholeheartedly support that. I think it's great to see businesses responding to good public policy by making beneficial decisions for them and for their workers as well.
Thanks, Mattie. This is so much information, and it's really been encouraging. I think we do have a lot to look forward to for Tax Day 2018. Unfortunately, we're running low on time, and there's been, this Facebook Live interview is chock full of information. So I encourage people who've watched today to share this far and wide, to watch it again and get all of it that Mattie has shared. I've been trying to absorb it, but she's obviously a great resource. We've heard from people, a lot of our commenters on Facebook Live have given you thumbs up, and they've given you the 100 emoji.
Oh, great.
We even have a commenter saying she's already seeing more money in her paycheck, which is a common refrain that we hear when we ask women in the economy, how is this tax reform bill affecting you personally? So again, I'm Hadley Heath Manning, Director of Policy at Independent Women's Forum. I've been talking today with our visiting fellow, Mattie Duppler. You can find out more about Mattie's work and my work at the Independent Women's Forum website, which is IWF.org. Mattie mentioned a couple of pieces that she's written. Those are going to be linked in the comments for this Facebook Live. And my policy focus that I mentioned is also going to be linked in the comments. So I hope everyone truly has a happy tax day this year, thinking about the fact that this will be the last time you have to file according to an old broken tax system. And we can look forward to about a year from now, an improved process. So Mattie, thanks again for joining us. And thanks everybody for tuning in. We'll see you next time on the next IWF Facebook Live.